Hello and welcome to the latest market alert from XTB. Today I want to speak about Friday's US jobs report and the impact that it could have on three key markets. So if you go on the XStation platform here, if you look at the calendar tab, you can see tomorrow, which is Friday the 3rd of August, we have some potentially major data out from the US. So there's three real areas within this jobs report that I'll be looking for. First off, the non-farm employment change for July is expected to come in at 190,000 compared to 213,000 last time out. I'll also be looking to the average earnings year on year, which are expected to remain in line at 2.7%. And finally, the unemployment rate, which is expected to dip back down low, below 4% to 3.9%. Now, turning our attention to the charts, the impact it could have on some markets. First off, we'll look at stocks and the US 500. You can see we've had some further weakness there, and the market is pulling back down below the 2,800 level and retesting the prior breakout level from 2,791. Now, this is potentially very important on a daily closing basis, and if we do get a daily and a weekly close, if we end below there tomorrow, that could be a significant event for this market, and it could make this latest move higher look like a false breakout. In terms of the bigger picture, we still have the all-time high above at 28.78, and if we do drop below 27.91, then there could be some support found on this rising trend line, but if we do fall below there, then we could see further declines all the way down to around 26.93, these previous lows. Now, turning our attention to FX, you can see I've got the Euro US dollar here. The Euro US dollar has been moving lower in recent days. We could be set for a third day of declines here after once more this falling trend line was respected by the market. Really, the market's been a consolidation now for a couple of months where we've got this major long-term potential support around 115.10, which has been providing a floor and attracting buyers. And it's not really until we see a break above this trend line and even 118.50 that I think longs can hope to push higher and recover some of those losses that we saw during the declines earlier this year. Very long term, this could be a big head and shoulders formation forming here and developing, but at the moment, this isn't quite valid, and we'd need a clean break below 115.10 before you could look for a larger move down lower. It's a similar picture with gold. You can see we had that strong move lower in recent months on the back of some US dollar strength, and we've once more pulled into a fairly long-term support area around 12.05 to 12.15. You can see this is taken from this previous low back here. Now, if this area once more can attract buyers and hold, then we could see a recovery with fib retracements of this decline from the highs up at 13.65 to those lows at 12.11, offering possible targets. You can see the first one I've got drawn on here is a 23.6% fib at 12.48. And if we do get above there, then we could go to 38.2, possibly even the 50 and 61.8, which are quite significant due to their previous swing levels as well, potentially. But this all depends on these lows holding around 12.05. If we do dip below 12.05, and that changes the picture somewhat, and you could see we could then have further downside, potential swing support around these lows, but we could even continue lower and drift down all the way to these the bottom that we saw at the end of 2016 around 11.23. Okay, thanks for listening and best of luck if you're trading over this release and into the weekend.